than just business news, we're news for business people.
Hi, good morning. You're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Let's first look at the headlines this morning. Asian markets edged lower as muted retail sales growth in the US dents sentiment. Urjit Patel hits back at RBI's critics, says no regulator can prevent all frauds, adds that RBI had limited regulatory powers over PSU banks. The Dalmia Bharat, Bain Capital and Piramal combine is said to have Binani Cement's creditors' support to buy the company. And 65 anchor investors, including names like BlackRock, HSBC and Abu Dhabi Investment Authority, subscribed to Bandhan Bank's 4,470 crore IPO, which opens today. Let's turn to international markets now. And US stocks fell for the third day in a row after President Donald Trump sought to impose fresh tariffs on China, keeping fears of a trade war on a boil. Bloomberg's Abigail Doolittle sums up all of Wall Street's action in this report.
There was yet another day of intraday volatility on Wednesday, with the major averages starting higher and finishing lower. On the close, the Dow was down 1%, or by nearly 250 points. The S&P 500 fell by 0.6%, while the tech-heavy NASDAQ was down the least, down by about 0.2%. Now, this does represent, however, the third down day in a row for both the S&P 500 and the Dow, so a bit of a return to bearish volatility, even though there wasn't a clear trigger for the selling action. Seems investors are jittery, as reflected by those whipsaws. Now, relative to Wednesday's pullback, it was broad-based. 9 of the 11 S&P 500 sectors did finish lower. Materials, consumer staples, financials, and industrials were among the worst, all down more than 1%. As for notable movers on the session, Boeing fell 2.5% as a supplier indicated, quote, challenging first quarter. Coca-Cola dropped by 1.8% and Goldman Sachs shed 1.5%. As for some winners, some well-known tech names did gain on the day, such as Facebook, Alphabet, and PayPal. All of those stocks were up 1% or more, but it wasn't enough to stem the overall market declines. And when those are factored in with haven bonds and the yen rallying, Wednesday's Wall Street session had a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
And if you're still tracking it, the Bitcoin fell last night or in the last session after Google said that it would clamp down on advertisements on its site with regard to cryptocurrencies. Let's look at the Asian markets now, and they've opened lower and in fact headed even more lower. The Nikkei in Japan, when I checked about half an hour back, was about 0.5% lower. It's now nearly 1% lower at this stage. Let's move on now to the Indian market, and Darshan Mehta is here to set you up for the day's trade. Morning, Darshan. It's, well, weak cues, clearly, from overseas.
It is, at least on the equity front, yes, on the commodity front, yes. Crude has managed to stable, that's about it. But the SGX Nifty is indicating a big gap down opening for our market. It's indicating a gap down of almost 68 points after a weak close that happened yesterday. So expect a weak opening from our markets. Most of the ADRs also, no major fireworks coming in. Wipro was down over 2%, Dr. Reddy's, Tata Motors, Vedanta, all of them were down in trade. The big, obviously, loser was Wipro. HDFC Bank and ICICI Bank managed to stay afloat. Banking as a space did well among the ADR market. Now, if you're looking at crude, it's managed to stabilize for the past 2 days. No major gains coming in, but nevertheless, it's trading with a slight positive bias. So again, the Brent crude is failed to take over the $65 barrel per mark, and Brent WTI is close to the $61 barrel per mark. As far as the base metals are concerned, most of them had a weak closing on the LME, because if you're looking at it, zinc was down over 2%, aluminium was down close to almost 0.7%. You had the nickel, which was down 0.3%. Marginal gains coming in copper as well as lead in trade yesterday. But if you're looking at China currently, zinc is trading down another 1.5%. Steel is seeing a little bit of rally that's coming in, but apart from it, it's very stable cues that are coming in from the currency space. Most of the precious metals, as you can see here, are trading with a slight positive bias. Now, to take a look at the fund flows, FIIs, they sold in yesterday 259 crores. DIIs sold in almost 430 crores. But on a month-to-date basis, FIIs have bought in almost 8,300 crores. But remember, this includes the big TCS block deal that was there. And DIIs have bought in almost 845 crores in the cash market. Now, if you're looking at how the markets panned out in trade, the small cap saw a little bit of selling that came in. Mid cap was up, and the Nifty Bank managed to move up in trade significantly. It was up 0.5%. Mainly, the PSU banking index, again from the lows of the day, managed to rally. It was up almost 1.7% in trade. Now, what didn't do well? Basically, the real estate, metals, and Nifty energy were the counters which didn't do well in trade. Now, if you're looking at the Nifty, the Wix itself, the Wix was flat in trade, nothing much happening as far as the Wix is concerned. If you're looking at the Nifty, it was down almost 15 points. Some bit of, but Tech Mahindra seems to be doing well. It's at a fresh 52-week high. Maruti, Suzuki, Yes Bank, and ICICI Bank managed to rally, but losses coming in because of HDFC, Reliance, as well as IOC. So the view currently is slightly on the bearish side.
Well, but what are the levels and what is the range that we're looking at with regard to the futures?
Yeah, so basically, if you're looking, I'll get to that and I'll show you the chart and you can get to it. But the fresh shorts were seen on the Nifty yesterday. It was down by almost 150 by 0.15%. As far as the Nifty Bank was concerned, the Nifty Bank was looking rather strong. It saw 6% open interest build up on the long side. Now, if you're looking at the range, this is the range that we are seeing. 10,400 to 10,500 is where you're seeing maximum amount of positions being taken. So you're seeing, but the point is that even at 10,400 now, call writers have becoming aggressive. So probably there's a high chance that the range may shift from 10,400 to 10,500 to 10,300 to 10,400 in trade today. Now, what happened yesterday, since the market was weak and we look at where the open interest change happened, 10,400 is where call writers became extremely aggressive, which means that the bears took control of the market and put writers shifted positions to level of 10,100 and they were shedding positions across. So it looks like a weak market, and with a 66-point gap down opening at close to 10, so the range will shift lower to the 10,300 mark in trade. PCR, the Nifty PCR was flat. The Bank Nifty PCR moved up given the fact that the Nifty Bank was looking rather strong in trade yesterday. Stock specific, some of the stocks in focus. KPIT Tech at a new fresh 52-week high. Fresh buying was seen on the counter. TV18 again saw fresh buying on high open interest build up. Yesterday the media pack did well. Even Dish TV for one did well. So Dish TV saw fresh buying on open interest build up of almost 8%. The other stocks in focus was Indian Oil, which saw fresh shorts, open interest build up of 10%. Remember, it goes ex bonus today. And JP Associates saw short covering. Open interest was down 4%. The counter was up 10%.
All right, thanks so much for that, Darshan. Let's move on now. RBI Governor Urjit Patel has broken his silence on the PNB fraud. Speaking at the Gujarat National Law University, Patel said that incidents like the PNB fraud are akin to the looting of the country's future by a few businessmen. He also said that it was not possible for the regulator to detect all frauds in the system. Vishwanath Nair joins us with all the highlights.
The Reserve Bank of India Governor Urjit Patel has started a whole round of conversations around the Punjab National Bank fraud as well as the fallout therein. What the regulator is pointing out is that it's unfair that some people are commenting on the Reserve Bank's capability to regulate these banks and saying that it's unfair that you will say that the RBI did not do its job well. In his latest speech, the regulator points out that the Banking Regulations Act actually distinguishes between how the RBI can regulate a public sector bank and a private sector bank. While they have far more powers in regulating the private sector entities, when it comes to public sector banks, the whole regulation is actually divided. What Urjit Patel, the RBI governor, says in his speech is that there is a legislative reality here. The Banking Regulations Act ensures that there is a division of power between the Reserve Bank of India and the Finance Ministry, because the government is the highest stakeholder in the public sector lending landscape. So there is a dual sort of regulation happening of the public sector banking entity. He also goes on to point out that there has been a tendency to just blame the RBI every time there is a fraud post facto after the fraud has been revealed. He's saying that just because the RBI is present in every bank board, it is not possible for a banking regulator to fully detect every single fraud and stop it. He he claims that the Reserve Bank of India can only detect a majority of the frauds and try and minimize the impact of it and try and reduce the number of people that are affected by it. But by no means does the RBI have the power to completely stop every single fraud that is happening in the public sector banking space. He goes on further to add that the Reserve Bank of India does feel anger, hurt and pain looking at the various frauds that are happening in the public sector banking space, and he's saying that this practice of frauds that are happening within multiple public sector banks is akin to looting of the country's future by some in the business community in cahoots with some lenders. So he's clearly pointing at the Nirav Modi scandal here, but that's what the Urjit Patel speech points out. Finally, he's talking about taking this opportunity of conversation around governance in public sector banks and using it to take care of the stressed asset problem. He's saying that is the biggest problem that is facing the public sector banking space at this point in time. And he's saying that until the churn, so he's drawn out this entire metaphor between what is happening at public sector banks and the Samudra Manthan and the poison that came out of it. He's saying that till the point in time that this churn is complete, the RBI is ready to take up any brickbats that may come in the way. So he's equating that with poison, and the RBI is ready to handle it till such point in time that the nectar of stability is achieved. Of course, he's being poetic, but then he essentially says that the RBI is ready to take any brickbats that may come in the process of dealing with these bad loans till such point that the public sector banking system can completely be out of this problem. And he is urging some of the people involved in this to be on the good side of this entire debate rather than being against the RBI in this fight against non-performing assets.
You don't always hear the Governor of the Reserve Bank of India talking about Indian mythology and likening it to the banking space. But let's hear what two former deputy governors of the Reserve Bank of India, we're talking about K.C. Chakraborty and Usha Thorat, had to say about the RBI governor's statement.
Whatever governor is saying, this is perfectly correct. There is absolutely no doubt that these are the facts. Only thing, this should have been told much earlier by everybody from Reserve Bank. In fact, in 2013, I have said our regulation is not ownership neutral. But when you say that has to be raised. Second thing is that our ownership has many other defects. First thing, it is not neither rule-based nor principle-based. It is discretion-based. Our regulation is not proportionate because we don't have a risk management framework in the bank. So all this has to be tackled.
Banking regulatory powers in India are not ownership neutral, and the kind of powers, regulatory and supervisory powers that RBI can exercise over the private sector banks is not applicable to the public sector banks. And he has given in detail the various powers which one could exercise to bring about the necessary regulation and supervision of the private sector banks, which is not applicable in the case of public sector banks. And I think this is a time for really soul-searching. And if what Governor has very clearly and eloquently laid out, if these are addressed, I think the kind of mechanisms that can induce a discipline against frauds could certainly be put in place and strengthened.
All right, let's take a check on the rupee and the bond market now. Saloni Dhanuka has all the updates there. Morning, Saloni.
Good morning, Alex. So the rupee yesterday paid all the losses and it ended at a fresh 2-week high at 64.84 levels against the dollar. Now the domestic currency witnessed huge volatility in trade yesterday and it hovered between 30 paise range throughout the day before closing higher for the third straight session. Well, speaking of the debt market, sovereign bonds declined yesterday for the second day as the foreign investors continue to short the bonds, and also central banks moved to ban the issuance of LOU, somewhere added to the bearish sentiment. Also, yield on the new 10-year benchmark security ended 3 basis points higher at 7.68%. Well, in terms of flows, global funds increased their rupee debt holdings yesterday. They infused close to 820 crores according to NSDL data. And remember, they were withdrawing for the last 6 consecutive sessions. Well, on the global front, an unexpected drop in the US retail sales data for the third straight month largely weighed on the dollar index, and it almost lost ground against all of its G10 peers, and it now trades steady near 89.70 levels. Elsewhere, euro declined 0.2% yesterday after ECB president said at a conference that recent currency gains in euro have been largely driven by exogenous factors and they continue to monitor these factors. And lastly, speaking of dollar rupee, it is trading at 64.98 levels against the dollar in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade, Alex.
Thanks for that, Saloni. Now, for all the updates in the commodity space, we're joined by Jayesh Khilnani. Morning, Jayesh. The crude, well, Brent seems to be heading closer to that $65 mark.
Morning, Alex. That's right. So crude oil prices have actually halted their losses. In fact, in early Asian hours, we are seeing slight bit of uptick come about for both WTI and Brent, trading higher by about 0.2%. Now, this is on the back of stronger demand, which has actually offset the supply concerns that we have been witnessing in the last few weeks. So, for example, Cushing and Oklahoma inventory rose for the first time in about 12 weeks, and it's for the first time in 2018 that we have seen an inventory rise for 2018 as well. As far as the base metals are concerned, we had a mixed close for most of the base metals on the London Metal Exchange. Copper and lead were the only two which closed marginally positive, while we had aluminium, zinc, nickel and tin which declined in trade. Zinc was the top loser, that declined about 2%, and similar action can be seen from the Shanghai Futures Exchange. The reason for lead, which actually gained, was that the cancelled warrants that came in up at about 70% in the last 2 days, which is the most since Jan 2017. So that was a positive for the lead prices. As far as gold prices are concerned, we saw some bit of dip come about for gold prices on the back of Federal Reserve that is likely to be on track for the rate hike.
Thanks so much for that, Jayesh. Let's move on to updates in the primary market now. And the first Indian microfinance lender to get a universal banking license, that's Bandhan Bank, is now headed to the stock market. It's looking to raise nearly 4,500 crore rupees through its IPO. Shraddha Babla joins us now. Shraddha, morning. Break down the numbers for us.
Good morning, Alex. So starting off with, Bandhan Bank is looking to raise 4,473 crores. That's the number that it will raise at its upper price band. So out of this, 3,662 crores will come from a fresh issue, while 811 crores is an offer for sale by existing investors, IFC and IFC FIG, both which are World Bank arms. So they have actually set the price band at 370 to 375, and that would imply a post-issue market capitalization of 44,730 crores. What does that mean, or how big is that? Well, if you compare it with the market capitalization of some of the other names, if you see Bandhan Bank's market cap, that will be that will put it much higher in terms of the market cap ranking, ahead of the likes of RBI Bank, Federal Bank, or even IDFC for that matter, and probably more closer to Yes Bank's number. It is obviously much larger than some of the other non-banking NBFCs turned banking entities like AU Small Finance Bank, Equitas and Jeevan Financial as well. If you look at the current shareholding pattern, the promoter, which is Bandhan Financial Holdings, had about 89% stake, and that will come down to about 82% post the issue, Alex.
Well, you know, that's about the IPO and the issue, but Bandhan Bank has a very interesting model as well, and microfinance has its share of, admirers and detractors.
Well, right. So just to give a brief background of what Bandhan Bank was, it earlier operated at Bandhan Financial Services, which was India's largest microfinance companies. And then after receiving RBI's license, it began operations in August 2015. It was RBI's rule that they would have to list in 3 years from the start of operations, and hence this IPO. But if you look at the company's business portfolio, broadly they have 887 branches as of December 2017. Most of the branches are concentrated in North and Northeast, 56% just in the states of West Bengal, Assam and Bihar. 10 million out of 12 million customers are women. So this is as far as their broad business aspects are concerned. If you look at their loan book, even today, as of 9 months FY18, 88% of the loan book has been dominated by microfinance, which is small or micro loans. small enterprise loans which are unsecured loans form about 5%, SME loans 4%, and other retail loans 3%, which includes the likes of housing finance, two-wheeler loans and gold loans, which the bank is trying to increase their presence in. After that, if you look at the financials, the bank had a loan book of 22,000 crores. They had a net interest income of 2169 crores as of December and a net profit of 958 crores. But it does show that they have been able to significantly scale up the balance sheet in terms of loans and deposits since they converted to a bank. Now, if you compare to some of the peers, Bandhan Bank's loan book is at 24,000 crores, which is much higher than the likes of AU Small Finance Bank and Ujjivan or Equitas Finance. If you look at the gross NPA ratio, however, it fares much better with the number of 1.67%. So their book was much better managed despite the pain that microfinance companies saw during demonetization. The ratio much better than the likes of Ujjivan Financial or Equitas also, and comparable to that of RBL Bank. If you look at the net interest margins, they are amongst the highest in the industry at 9.9%. The CASA ratio also stands at a strong 33%. That is comparable to some of the larger peers or larger private banking names, the CASA number. And when it comes to the cost to income ratio, this is one of the most important and strong aspects of Bandhan Bank, because the cost to income ratio is extremely low at 35% compared to the likes of a HDFC Bank. So they've managed their cost structures very well. Now, if you look at the return profile also, ROAs and ROEs are much stronger at 4.5 and 28.5%. This will of course come down after capital infusion on account of the IPO, but still analysts expect outperformance as far as the return ratio profile is concerned. In terms of valuation, however, and that is the pain point, now Bandhan Bank's IPO on a 9-month FY18 post dilution basis stands at about 4.9%, which is a lot more than something like 2.1 of Equitas or even Ujjivan, which has 2.4, and it compares more to the likes of HDFC Bank. So it's really the valuation which is a concern here. So they are strong margins, they have a low asset quality number, cost structures are well, asset liability scale up has been good, but the IPO seems pricey, and that's what most of the brokerages are saying. But instead of, despite all these reasons, you have Antique, which has a subscribe, ICICI Securities, which has a subscribe on it. Centrum Broking says subscribe for long term, and IIFL also says that you should subscribe to the issue.
Thanks so much for that, Shraddha. Let's move on now. Here's a big update in the insolvency matters, and we're talking about Binani Cement, in fact. The company's creditors are said to have chosen the Dalmia Bharat consortium's bid for the stressed company. A consortium of 3 firms led by the Dalmia Group and backed by Bain Capital and Piramal Enterprises has put in a bid of 6,300 crore rupees for the cement company's assets. That's according to people with direct knowledge of the matter. The country's largest cement maker was the second bidder for Binani Cement. We're talking about UltraTech Cement, and UltraTech Cement had offered to increase its bid from 6,200 to 6,600 crore for Binani Cement. Moving on to the big brokerage calls of the day, Somit Sarkar has a couple of them to tell you about. Morning, Somit.
Good morning, Alex. On the big brokerage calls for the day, first we have is HSBC on Phoenix Mill. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 730 from 720. Now, as the residential segment is remaining slow, companies move to build office space is a sound strategy, says the brokerage. With RERA coming in and on the back of shortage of grade A commercial office space, this strategy of moving towards commercial offices is to be more value accretive according to the brokerage. Now, going forward, it is expecting strong free cash flow from the company as commercial office space will generate rental income when completed and can be leased, which the brokerage expects to happen post FY20. Lastly, it says that it has a buy rating on the stock as it expects strong rental growth to continue going forward. Second, we have a CLSA on Century Plywood. Now, the brokerage has maintained its buy rating on the stock and the target price at 420. Now, according to the brokerage, there has been a shift in the Indian furniture market with moving preference towards ready-made furniture and medium density fiber over plywood. Now, Century, which is a late entrant in this market, has still managed to catch up with the peers. The company's new MDF plant has achieved quick production ramp-up with current plant utilization to be around 53%, which is expected to go up to around 80% by financial year 2019. Now, the plant has also achieved cash break-even faster than expected according to the brokerage. Lastly, the brokerage expects MDF to contribute around 17% to the consolidated revenue of Century Plywood by financial year 2020.
Thanks, Amit. Well, Shraddha is back with the stocks in news, and those are the stocks that are likely to be buzzing in trade today. Shraddha, what are the stocks on your list today?
Starting off with ICICI Bank, Alex, where they will be selling 7.72 crore shares in its subsidiary ICICI Securities in an IPO which will open on 22nd. The price band for which has been set at 519 to 520. Broadly, it shouldn't have a very large impact on ICICI Bank, given that the contribution of ICICI Securities to the overall SOTP valuation of ICICI Bank stands close to about 5% as per analyst estimates. You also have Canfin Homes, which will be in focus. Now, this is on the back of a Times of India report which says that HDFC has emerged as a front runner as far as Canara Bank's 30% stake sale in Canfin Homes is concerned. In fact, the report also says that HDFC has filed a binding cash cum stock offer in which it will offer 14% cash for a 14% stake upfront itself, and then they will also have a share swap ratio for the remaining 16% stake, so watch out for that name. Wipro will sell the hosted data center services operations to US-based company Ensono for $405 million. In return, Wipro will invest about $55 million to pick up a stake in Ensono, so keep an eye out for that name. Havells India is another company on our list. They have signed an agreement with Hyundai Electric for manufacturing magnetic contactors in India, where they've said that the market size is estimated to be about 1,200 crores. Dalmia Group is set to win lenders backing for Binani Cement, so again watch out for Dalmia Bharat and Binani Holdings, which actually holds Binani Cement. Welspun Enterprises negative development coming in that the company has said that NHAI will invite rebids for a Tamil Nadu project in which Welspun Enterprises had been declared as the lowest bidder on 24th February. And lastly, Majesco will provide digital platform to who came best insurance company. So some sort of an order win over there. So watch out for all those things.
Thanks, Shraddha, for that. Now, on to the big update in the political space. In a stunning blow to the BJP ahead of the 2019 general elections, the party lost by-polls in all three Lok Sabha seats it contested, including its bastion Gorakhpur and Phulpur in Uttar Pradesh, as well as Araria in Bihar. The electoral loss in Uttar Pradesh comes at a time when the state government under the BJP is poised to complete 1 year in office on the 19th of March. The outcome is significant for the BJP, not just because the seats were held by the two most important leaders of the party in the state, but also because its two arch rivals, Samajwadi Party and Bahujan Samaj Party, came together to contest the by-elections. Well, we accept the people's mandate on the UP by-polls. That's the word coming in from the UP CM Yogi Adityanath. He also said that the BJP will prepare a strategy against the SP and BSP in 2019. Listen in.
जो ये जनता ने फैसला दिया है, यह अप्रत्याशित है। हम लोगों ने पूरी मेहनत की थी। 2019 में सपा बसपा का जो यह राजनीतिक सौदेबाजी एक बार पुनः प्रदेश और देश के विकास को बाधित करने की दिशा से बना है, इसके बारे में हम लोग अपनी पूरी रणनीति तैयार करेंगे।
Well, that's all we have for you in this edition of Daybreak, but up next is all you need to know, so do stay tuned. Thanks for watching. This is Bloomberg Quint.